contains forward-looking statements as defined in the Private Securities Litigation Reform Act of 1995 regarding, among other things, future operating and financial performance, product development, market position, and business strategy, and the anticipated separation of the company's consumer health business. The reader is cautioned not to rely on these forward-looking statements. These statements are based on current expectations of future events. If underlying assumptions prove inaccurate, or known or unknown risk or uncertainties materialize, actual results could vary materially from the expectations and projections of Johnson & Johnson. Risk and uncertainties include, but are not limited to, economic factors, such as interest rate and currency exchange rate fluctuations, competition, including technological advances, new products and patents attained by competitors, challenges inherent in new product research and development, including uncertainty of clinical success in obtaining regulatory approvals, uncertainty of commercial success for new and existing products, challenges to patents, the impact of patent expirations, the ability of the company to successfully execute strategic plans, the impact of business combinations and divestitures, manufacturing difficulties or delays internally or within the supply chain, product efficacy or safety concerns resulting in product recalls or regulatory action, significant adverse litigation or government action, including related to product liability claims, changes to applicable laws and regulations, including tax laws and global healthcare reforms, trends towards healthcare cost containment, changes in behavior and spending patterns of purchasers of healthcare products and services, financial instability of international economies and legal systems and sovereign risk, increased scrutiny of the healthcare industry by government agencies, the company's ability to satisfy the necessary conditions to consummate the separation of the company's consumer health business on a timely basis or at all, the company's ability to successfully separate the company's consumer health business and realize the anticipated benefits from the separation, and the new consumer health company's ability to succeed as a standalone publicly traded company. A further list and descriptions of these risks, uncertainties, and other factors can be found in Johnson & Johnson's annual report on Form 10-K for the fiscal year ended January 1st, 2023, including the sections captioned Cautionary Note regarding forward-looking statements and Item 1A Risk Factors, and in Johnson & Johnson's subsequent quarterly reports on Form 10-Q and other filings with the Securities and Exchange Commission. Copies of these filings are available online at www.sec.gov, www.jnj.com, or on request from Johnson & Johnson. Any forward-looking statement made in this presentation speaks only as of the date of this presentation. Johnson & Johnson does not undertake to update any forward-looking statement as a result of new information or future events or developments. This presentation refers to certain non-GAAP financial measures. These non-GAAP financial measures should not be considered replacements for and should be read together with the most comparable GAAP financial measures. A reconciliation of these non-GAAP financial measures to the most directly comparable GAAP financial measures can be found in our annual report at https://www.investor.jnj.com/ASM/2022-annual-report, and on the Investor Relations section of the company's website at www.investor.jnj.com.
Hello and welcome to our 2023 annual meeting of shareholders. I'm Joaquín Duato, Chairman and CEO of Johnson & Johnson. 2022 was an important year for our company. It was a year of achievement and evolution, and today we look forward to providing an update on our business. A copy of today's program, including the agenda and the rules of order, are available in the meeting materials section of the meeting website. There you will find links to our 2023 proxy statement and our 2022 annual report. I'm joined by Mark Larkins, our Corporate Secretary and Worldwide Vice President of Corporate Governance, who will cover the items described in our proxy statement. We also have time for Q&A, and you can submit your questions throughout the session by typing directly into the box on the webcast platform. I would like to welcome my fellow board members who are with us today. These are exceptional leaders who bring diverse background, experience, and skill to their work in overseeing our strategy. And together they ensure the long-term and sustainable success of our company. I would also like to acknowledge Alex Gorsky, Ian Davis, and Jim Washington, who are retiring from the board and are not standing for re-election. I personally want to thank each of them on behalf of the entire board for their dedication and many contributions over the years. We are grateful for the wisdom, expertise, and judgment they brought to the company, and we wish them the very best. And on behalf of all of us at Johnson & Johnson, I say thank you to you, Alex, for your vision and energy as our former CEO and chairman. I would also like to welcome our Johnson & Johnson Executive Committee members who are here with us today. And we are joined by Steve Johnson, representing PricewaterhouseCoopers, our independent auditors. And with that, I would like to officially call this meeting to order. To start, I would like to thank our shareholders, including the many I continue to engage with over the last 12 months. In my first full year as CEO and now chairman, we delivered solid financial performance and enhanced value for our shareholders. I'm incredibly grateful to the more than 150,000 employees who power our success. At the same time, and in one of the most significant decisions in our 137-year history, we made strong progress towards the separation of our consumer health business, Kenvue. This prepares us to become a two-sector company that will be more focused, less complex, and more competitive. With this change, Johnson & Johnson is uniquely placed to lead our industry through a fast-evolving healthcare landscape. And while much is evolving at Johnson & Johnson, I want to reassure you that our credo is not changing. As many of you know, our credo was crafted 80 years ago by Robert Wood Johnson, a member of the company's founding family. It unites and reminds us of our deep responsibility to patients and consumers, healthcare professionals, our employees and communities, and to you, our shareholders. It shapes how we use our size for good and reminds us that there is so much more we can do for the world. As we look back at our full year 2022 financial and business performance, I'm pleased to report that we made significant progress on our plans despite the complex economic and geopolitical environment. We achieved full-year operational sales growth of more than 6%, and on operational basis, adjusted diluted net earnings per share increased by over 9%. Our financial success is underpinned by 29 brands and platforms that each generated more than $1 billion in 2022 sales, as well as an industry-leading innovation pipeline. We deployed more than $17 billion towards acquisitions, invested nearly $15 billion in R&D, and returned capital to shareholders through our share repurchase program and dividends. In fact, just last week, we announced an increase in our dividend for 2023, marking the 61st consecutive year of increased dividends. Total shareholder return for 2022 outperformed both our competitor composite and the S&P 500. This significant value creation was made possible by our long-term strategic focus and outstanding execution across all three segments of our business. Our pharmaceutical business delivered its 11th consecutive year of above-market adjusted operational sales growth. Growth was driven by oncology products such as Darzalex and Erleada, and our immunology portfolio, including Stelara and Tremfya. I am particularly excited about the progress in our multiple myeloma portfolio. This includes the launches of Carvykti, our cell therapy, and Tecvayli, a first-in-class bispecific antibody, along with the recent filing of Talquetamab, a novel bispecific antibody. We're also making strong progress in advancing our pharmaceutical pipeline, which includes 5 novel therapies with peak year sales potential of greater than $5 billion. And our position as a leading pharmaceutical company was again reflected in our #1 rank on Fortune's Most Admired Companies list. Turning to MedTech, we continued our top-line momentum, growing in line with our competitor composite and maintaining or growing market share in most of our priority platforms. We also accelerated the cadence of new product launches, introducing more than 30 significant new products to market in the last 2 years. An important part of this is our surgical robotics portfolio, which is advancing rapidly. We continue to see strong market adoption with VELYS, our robotics-assisted solution for ATTUNE knee replacement, and our Monarch platform for urology is now being used for robotic-assisted removal of kidney stones. At the same time, we substantially enhanced the quality of our MedTech pipeline, more than doubling the number of programs with over $100 million net present value potential. Notably, we completed the acquisition of Abiomed, positioning us as the global leader in heart recovery. This becomes the 30th $1 billion plus platform in our portfolio and strengthens our exposure to higher growth segments. In our consumer health business, we delivered solid performance despite a challenging macroeconomic environment. We made significant progress towards the separation of Kenvue, the new consumer health company, and have begun operating our consumer business as a company within a company. Kenvue filed its Form S-1 with the SEC, allowing it to pursue an IPO as a step in the separation, and this week we announced the launch of Kenvue's roadshow for the IPO. We remain on track to complete the separation in 2023, market conditions pending. Throughout 2022, I was constantly reminded of what the world expects from us. I met with partners, customers, and shareholders to discuss our contributions to champion global health equity and advance the world's environmental health. And we know that Johnson & Johnson's performance is strengthened by what we do to deliver on our environmental, social, and governance strategy. We'll continue to focus on our decades-long strategy to maximize access to our innovative medicines and technologies, which in 2022 saw us ranked #2 in the Access to Medicine Index. We also continue to drive critical programs that ensure sustainability while strengthening social impact, including our $100 million pledge in our Race to Health Equity and $250 million commitment to support frontline health workers. Across our businesses, we continue to prioritize the most promising innovation to deliver for patients and customers and for you, our shareholders. We believe that science and technology will advance healthcare more this decade than it has in the last century. The next wave of innovation will lead to greater personalization, earlier intervention, and smarter, less invasive healthcare solutions. And Johnson & Johnson is well positioned to lead in all these areas. For 137 years, we have succeeded by focusing on the needs of patients, doctors and nurses, employees, communities, and shareholders. As I said at the beginning of the meeting, our future success will continue to be built on the foundations of our credo. And 2023 will be one of the most exciting years in our history. We start a new chapter, not just for one, but two global companies with outstanding people, strong portfolios and pipelines, and incredible opportunities. Thank you for your continued support of Johnson & Johnson. And with that, I will turn the meeting over to Mark Larkins.
Thank you, Joaquin. Hello, everyone. I am Mark Larkins, Johnson & Johnson's Corporate Secretary and Worldwide Vice President of Corporate Governance. I will present the formal portion of today's meeting. I'm pleased to announce that we have a quorum of shareholders present today, in person or by proxy, representing more than 83% of the outstanding shares entitled to vote at today's meeting. A list of all shareholders of record entitled to vote at this meeting is available upon request. Please refer to the meeting materials section of the virtual meeting website. The first item of business is the election of directors to serve on the board of directors until the next annual meeting. As described beginning on page 12 of the proxy statement, there are 12 nominees for the board of directors: Darius Adamczyk, Dr. Mary Beckerly, Scott Davis, Dr. Jennifer Doudna, Joaquin Duato, Marilyn Houston, Dr. Paula Johnson, Hubert Joly, Dr. Mark McClellan, Anne Mulcahy, Mark Weinberger, and Dr. Nadia West. Under our bylaws, the election of each director nominee in today's election requires the affirmative vote of a majority of the votes cast. The board recommends a vote for each of the nominees. The second item of business is an advisory vote to approve the compensation of our named executive officers, and the executive compensation philosophy, policies, and procedures described in the compensation discussion and analysis section beginning on page 57 of the proxy statement. As an advisory vote, the results of this vote will not be binding on the board or the company. However, the board understands the importance of receiving shareholder feedback on executive compensation. The board recommends a vote for this management proposal. The third item of business is an advisory vote on the frequency of voting to approve named executive officer compensation, as described in the proxy statement beginning on page 123. As an advisory vote, the results of this vote will not be binding on the board or the company. The board recommends a vote of every 1 year for this management proposal. The fourth item of business is a ratification of the appointment of PricewaterhouseCoopers LLP as the independent registered public accounting firm for Johnson & Johnson for the fiscal year 2023, as described in the proxy statement beginning on page 125. The board recommends a vote for this management proposal. The final items of business are two proposals submitted by shareholders. The first shareholder proposal and its supporting statement appear on page 129 of the proxy statement and was submitted by Oxfam America, Inc. Dr. Thabo Makgoba will introduce the proposal on behalf of the proponent and will have 2 minutes.
Good morning. My name is Dr. Thabo Makgoba. I am the Anglican Archbishop of Cape Town, and I'm pleased to speak on behalf of a resolution filed by Oxfam and 5 co-filers. 2 years ago, I joined nearly 150 world religious leaders in emphasizing that everyone must have the same opportunity to receive these life-saving vaccines. Access to them, we said, must not depend on people's wealth, status, or nationality. To this moral argument, I would add another, and today direct it to companies such as you, JNJ, which have received massive public funding and must not only ensure universal access, but have an obligation to account to the public for the ways in which their taxes have been spent, and in particular, to be transparent about pricing and access strategies. Will you, investors at JNJ, live up to that moral invitation and challenge? At a time when governments are grappling with how to prepare for future public health emergencies, shareholders and the public deserve to know more. So JNJ can live up to the company's credo by ensuring more transparency regarding access to your publicly funded vaccines. And so today I urge shareholders to support this proposal to provide clarity on how public funds factor into JNJ's approach to ensuring access to its COVID-19 products. Thank you.
Thank you, Dr. Makoba. The second and final shareholder proposal and its supporting statement appear on page 135 of the proxy statement and was submitted by Mercy Investment Services. Lydia Kuykendall will introduce the proposal on behalf of the proponent and will have 2 minutes.
Good morning, Mr. Chairman and fellow shareholders. Quote, rather than creating new medicines, sallying forth into new frontiers for the benefit of society, drug companies are focusing their time and effort extending the patent life of old products. This, of course, is not the innovation one would hope for. The greatest creativity at pharmaceutical companies should be in the lab, not in the legal department, end quote. These words by law professor Robin Feldman succinctly lay out some of the concerns we at Mercy Investment Services and co-filers have around our company's patenting strategy. As we all know, the cost of healthcare in the U.S. continues to be a major concern. In fact, 3 in 10 Americans on a prescription drug report not taking their medicine as prescribed due to cost. Intensifying this is the fact that branded drug makers have strong incentives to delay generic competition. One strategy they use is to file numerous overlapping patents on a drug filed after the primary patent had been granted and drug approved by the FDA. Critics of this practice argue that these patents tend to be low quality, as they are invalidated in litigation at a higher rate than primary patents, and that they allow drug makers the benefit from extended exclusivity periods without engaging in any additional innovation. For example, Johnson & Johnson has filed for 76 patents on Stelara, 75% of which were filed after original FDA approval. This practice poses risks to investors. Rising pressures to contain specialty drug costs, combined with the perception that branded drug firms are engaging in anti-competitive behavior, could lead to increased regulation. Even so, this proposal does not seek to prohibit the company from applying for additional patents on its medicines, only for the impact on patient access to be a part of the mix of considerations. We recognize the value created by true pharmaceutical innovation, and the proposal would not limit in any way the company's ability to obtain so-called primary patents. We believe that this process would be beneficial to the company because extended exclusivity periods gained from additional patents and the resulting delay in generic entry limit patient access, create regulatory and reputational risk, and saddle the healthcare system with unsustainable costs. For these reasons, we urge you to vote for item 8. Thank you.
Thank you, Ms. Kuykendall, and thank you to each of our shareholder proponents for their interest in and engagement with Johnson & Johnson. Directed by the 4th paragraph of our credo, our management team and the board take their responsibility to our shareholders very seriously. Shareholder engagement has been a hallmark of our corporate governance program here at Johnson & Johnson. In keeping with that commitment, we have engaged with the proponents of the shareholder proposals presented today. After careful consideration, the board recommends a vote against each of the proposals for the reasons more fully described in the proxy statement. In summary, the proposals request the production of reports that are repetitive to existing disclosures, and would divert resources away from progress being made on critical priorities. Our board actively engages with management and other stakeholders to provide effective oversight of and guidance on our short and long-term strategies. And our board has developed appropriate practices to execute its oversight responsibilities. It is therefore recommended that shareholders vote against each of the shareholder proposals presented today. The polls will now remain open for a few minutes. We will report on the voting results for each item of business in a few minutes, after the polls have closed and the Inspector of Elections has had the opportunity to conduct its preliminary tabulation. In the meantime, we would like to share a powerful video with you. And as Joaquin shared, it was certainly a year of impact and evolution.
Johnson & Johnson is working to solve the world's toughest health challenges.
Extending and enhancing the quality of people's lives is at the center of everything we do.
Think about how we're saving lives. If you change one life, you can change a family, you can change a community, we can change a society.
The polls have been closed, and I will now report on the preliminary voting results for the items of business that were presented. The preliminary voting results are based on the tabulation received from the Inspector of Elections today and are as follows. The 12 director nominees named in the proxy statement have been elected to the Board of Directors. The advisory vote to approve named executive officer compensation has been approved. The advisory vote on the frequency of voting to approve named executive officer compensation has received the majority of votes in favor of every 1 year. The ratification of appointment of our independent public accounting firm has been approved. The 2 shareholder proposals did not pass. The board and management appreciate all forms of feedback from our shareholders. Despite the advisory nature of today's vote on the shareholder proposals, as we always do, we will seriously evaluate today's voting results. Final voting results will be published within 4 business days of this meeting in a Form 8-K that will be filed with the Securities and Exchange Commission. This now concludes the formal portion of our program, and this year's annual meeting is adjourned. We will now open the meeting for a question and answer session. We want to thank you all for the questions you submitted, both before and during today's webcast. We will try to get to as many questions as we can over the next 10 minutes. As we reviewed the submissions, there were several questions on the same topic. For those topics, we have selected a representative question to answer today. Our chairman and I will now conduct the question and answer portion of this meeting. We received questions from Bruce R., Elmer D., and other shareholders regarding the separation of the consumer health business. Joaquin, can you please provide an update?
Thank you for your question. In November 2021, we announced our plan to separate Johnson & Johnson's consumer health business. This will establish two global leaders that are strongly positioned to innovate and deliver improved health outcomes for patients and consumers with targeted business strategies that will accelerate growth. Kenvue is presently in registration, and in line with securities laws, we are limited in what we can share publicly at this time. What I can share is that, as a step in the separation, we announced this week the launch of Kenvue's roadshow for an IPO. In parallel, we have started operating Kenvue as a company within a company, and we remain on track to complete the separation in 2023, market conditions pending.
We've received questions from Paul N., Mindy W., and other shareholders regarding the talc litigation and the bankruptcy filing. Can you provide more insight into the decision? Thank you for your question. I can address that. The company is committed to defending the safety of cosmetic talc while seeking an equitable and efficient resolution of the talc litigation. To do so, the company established LTL Management LLC, a separate subsidiary of Johnson & Johnson, responsible for the management of United States and Canadian claims in the talc litigation. LTL filed for voluntary Chapter 11 bankruptcy protection to bring certainty to all parties involved, while ensuring there is no impact to J&J's operations, employees, or other stakeholders. LTL's bankruptcy filing will have no impact on the Kenvue separation, and the talc liabilities in the United States and Canada will remain with Johnson & Johnson. As unequivocally and unambiguously stated, Johnson & Johnson has agreed to retain all the talc-related liabilities and indemnify Kenvue for any and all costs arising from the litigation in the United States and Canada. Any suggestion to the contrary is false and misleading. Let me also reiterate that we do not believe that any of the talc-related claims against the company have merit, but we do believe this is a positive step towards resolution of the talc litigation as equitably and efficiently as possible, in the interests of the company and all stakeholders. We received a question from Jim H. concerning the rising geopolitical tensions and how we plan to navigate the increasing complex business environment across the globe.
Thank you for the question. As the largest, most diversified healthcare products company, and consistent with our credo, we strive to bring better health to those who need it around the world. Over 137 years, Johnson & Johnson has deep experience with complex political situations, and we have a history of successfully navigating such times by evaluating geopolitical risks for all markets. These evaluations inform our business strategy, which includes deploying business continuity plans that maintain critical operations, leveraging partnerships to support preparedness, and maintaining a presence in multiple geographies to enhance our ability to respond to any number of changing factors. Our business strategy continues to be driven by what gives us the greatest ability to generate long-term value for shareholders and to address the needs of patients across the globe.
We received questions from Dana D., Joe W., and other shareholders regarding the company's environmental, social, and governance work. Can you discuss how the company's activities in the ESG space contribute to performance? Thank you for your question. I can also address that one. Nearly 80 years ago, General Johnson wrote the Credo, and since that time, the company has understood that to be successful and to make an impact on human health, we have a responsibility to our patients, our employees, the communities where we live and work, and to our shareholders. In keeping with that foundational commitment, our ESG management approach is designed to effectively govern and manage ESG risks, while also enabling us to identify opportunities that accelerate our business strategy. and unlock business value to benefit a wide variety of stakeholders. We tailor our efforts to make the most positive impact for our stakeholders while promoting our business performance. We do so in a fiscally responsible manner, though increasingly many ESG-related actions and disclosures are mandatory under law or regulation. We provide significant detail on our governance, disclosures, goal setting, and specific endeavors in our Health for Humanity report, which is published annually and available in the Investor Relations section of the Johnson & Johnson website. We received questions from John C. and other shareholders regarding dividends and the company's capital allocation strategy. Joaquin, can you elaborate on how the company has returned value to investors?
Thanks for the question. In 2022, Johnson & Johnson delivered solid financial performance and enhanced value for our shareholders. We delivered full-year operational sales growth of over 6%, significantly outperforming major indices and reflecting the strength and diversity of our business. During the year, we deployed more than $17 billion towards acquisitions, increased our dividend for the 60th consecutive year, and returned capital to shareholders through our $5 billion share repurchase program. Overall, we returned more than $14 billion to shareholders in 2022, and we continue our commitment to driving future innovation by investing nearly $15 billion in research and development. As announced last week, we have now increased our dividend for the 61st consecutive year. We are proud of our status as a dividend king, being one of only 37 companies who have increased their dividend for more than 50 consecutive years. Our total shareholder return for 2022 outperformed both our competitor composite and the S&P 500, contributing to a total shareholder return of nearly 13% compounded annual growth rate over the last 10 years. This significant value creation was made possible by both our long-term strategic focus and outstanding execution from teams across our business. That concludes today's meeting. I want to thank you, our investors, for your time, for your thoughtful questions, and for your confidence in Johnson & Johnson. Your investment is important to our success, and I'm excited to share with you all that we will accomplish in